Hello, everybody. I'm Toby Gennaro, and I've got a good-looking crowd on this morning. So let's do a sound check real quick, make sure that everything's coming across loud and clear. If the sound is okay, if some of you logged in could just let me know via the question box on your screen. Kind of give me a little electronic high five there and thumbs up, and we'll be ready to go, and we'll get do a formal introduction for recording purposes, and then jump right into the content. We'll do some actual live chart analysis here with Nadex spreads. Thanks, guys. Thanks for doing that. Looks like everything's good. So let me jump into the content here with a little quick introduction. Hello, everybody, and welcome. I'm Toby Gennaro, and I'll be your presenter for this morning. The topic for today is short-term trading with Nadex spreads. So I'm going to be talking through a series of specific trade setups that I'm seeing in real time in the markets and the charts. And then we'll take a look at how these technical setups fare with Nadex spreads. For those of you that are on the live webinar this morning, if you have questions during the session, you can type those into the question box on your screen. I may be asking you some questions as well, so we'll try to keep this keep it interactive. Okay. And as we normally do, just need to put up the risk warning and disclaimer. I'll leave this up for about 30 seconds or so. If you guys could just have a quick read through this, that would be good. In brief, what we're saying is that we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that? And then just one more disclaimer here from Nadex. You can have a quick read through this one. It's a short one, and that'll wrap up the disclaimers for this session, and we'll get right to the content here. All right, very good. Let's get started then. So this webinar provides a basic introduction to Nadex spread contracts, and we'll discuss the mechanics for trading them using the Nadex platform on some current markets that I'm looking at. I've got a couple of Forex markets we can look at. New traders to Nadex products or those with some previous experience will find this interactive webinar to be, I think, a great way to learn more about Nadex spreads and also give you the opportunity to ask some questions about some things that you may not understand. Now, for today, we'll look at some live trades setting up, and we'll apply the spread characteristics to the trade setup. I'll talk about a variety of ways to utilize spread contracts, and I'll introduce the risk and reward components as well as we go through the charts. So before we get started here on the live charts and finding some of those trade setups, just allow me to provide you a quick introduction to Nadex spreads so we can get everyone on the same page and everyone kind of understands what we're talking about. So let's just cover a few key points right here related to these Nadex spreads. Spreads are a fairly simple derivative. They have a built-in floor and a ceiling price that corresponds to the underlying asset price. So it really makes them easy to understand, a little bit different than the binaries that you might be accustomed to. It's basically a prepackaged vertical spread that you can trade either long or short. Okay, so the spread range of this contract defines then the high and the low price points at which the contract may settle relative to the underlying market price. And this creates then a potential tunnel of profitability between the high and the low range. And so like binaries, you always know your maximum potential loss and profit on each trade prior to ever putting any capital at risk on the trade. And like binaries, spreads are based on the underlying market, such as crude oil or natural gas or precious metals, Forex, equity markets, the like. Now, some benefits are a higher leveraged contract for hedging purposes to offset maybe a futures position in the underlying asset. And the most obvious benefit is having a limited risk contract without the need for a stop loss. Okay, so these contracts are cash settled once again, so there's no margin to consider, and you can trade these contracts with a fairly small deposit amount in your account. Now, if you like to trade contracts intraday, spreads are a great vehicle to do that since they have multiple expiration times each day to look for your setups, very similar to binaries that you may be already trading. However, there are no weekly contracts to trade with spreads, so you don't have any multi-day positions. Simply basically a 24-hour position would then be the longest hold time for a spread contract. So if you're currently trading binaries, I think you'll find the spreads to be maybe a little bit easier to understand in concept, since the contract pricing is much more correlated to the underlying asset price, and then the spread contracts move very much like the underlying market that you may be trading. All right, so let's go ahead and get to the charts. What I did was I took a look at a few charts previously before we started the session this morning, and these are the ones that I thought we would take a closer look at to consider for some potential trading opportunities today. So let's go ahead and take a look at those, and I'll walk you guys through some of the strategy and the technical thinking, and then we'll take a look at the spread contracts on the Nadex platform that correlate to some of these opportunities. So just give me a minute here to get my charts set up so you guys can see everything. We've got the actual charts that we're looking at, and then we've got the Nadex platform. We'll pull up the dollar CAD. That'll be the first one we'll look at, and then we'll look at some of the contracts there that I'm going to be interested in based on the price action that we're set up with on this particular trade. So let's just take a look here. I always like to start, as you guys know, with the higher time frame trends, even if we're trading some of the lower time frames, the 5 and the 15 minute, or the 30 and the 60. Looking at charts from a top-down perspective gives you, or gives me, I think anybody, a sense for what the higher time frame trend is. So if we're looking at the monthly, we can see that over the last year, basically, the market has really been sideways. There's been a high of about 115 and, a low point of somewhere around 105 to the low of the range, right about 107. So really kind of a sideways market. But as we go down in the time frames, you can see some trends develop here, like on the weekly. We have some higher highs, and we have some higher lows here, and we have a nice little setup candle setting up right there between the 10 and the 20, which gives me a lot of confidence that the market at least might make a run back up to this level up here around, say, 114 from where we currently are. We have all the moving averages fanning out, the 200, the 50, the 20, and the 10. Everything looks good right there. Even on the monthly, we still have all moving averages in alignment. And as we start to move down through, we can start to see some of the different arrangements of the moving averages. We got to remember that the highest time frame, which was the weekly that we were looking at, had that set up, so it may not be reflected yet on some of these other time frames like the daily and the 480. And there could even be, another retest of this level right here at 111 before we potentially get a closeout candle on that weekly chart. And also the weekly chart, it's only Tuesday today, so we still have another, 4 days of trading until that candle closes out. So there's no guarantee of any kind that that candle on that weekly chart is going to close out as it looks today, because it could close out a very red and bearish candle as well. So we always want to wait for that setup candle in the buy zone to completely close before actually looking for the trade setup. So right now I'm just kind of going down through the charts. I got a positive signal on the weekly for today, but again, I want to go down through the charts and then take a look for where a setup might be happening and the reasons for that. So here on downtrends here on the 240, downtrend here on the 120, actually nice sell setups here on the 120. But as we start to get down into some of these consistent lower lows right here, we start to get higher lows on the indicators, producing some bullish divergence, which might be a good reason for a relief rally. We don't know that just yet. As we go down to the hourly, we can start to see that some of that divergence start to come in on some of these lower lows right here as we begin to get higher lows on the charts usually signals a potential relief rally bounce. Same thing here on the 30-minute chart. We get an equal touch. Right down here, we get a much higher low than the previous low that was put in right here, and then we start to put in some higher highs, higher lows, and we've got a nice candle pulling back into the buy zone right here, and just looking for a setup potentially on the 30-minute chart, and then we can even take a look at the 15, and then we're right back in the buy zone again on the 15. So really I'd be looking for a setup potentially on the 15-minute and the 30-minute, provided that we get another nice bullish candle setup and a closeout right here. And right now we're sitting right around that 112.15 level, but we just don't have a closeout just yet on that particular candle. But let's go ahead and take a look at, in terms of getting set up for a potential trade. I always want to be looking at the charts and understanding, the spread range that I'm looking at. And let me just pull up that chart once again. I mentioned that 112.15 level, and then the top is going to be the 112.30 level, and potentially putting in a new high. So let's see what kind of contracts we have here. We're working with a pretty low time frame, so anything from 48 minutes would give us 3 candles on the 15-minute chart, 2 candles, about 2 candles on the other one. I'd like to have a little bit more time than that, but let's just take a look here and see if anything is in the range. And as you can see, we don't have anything in that 112 range. Everything is much higher than that, so we don't really have a lot to. Hang on, let's see. Am I on the? It'd help, I think, if I got on the right. There we go. Let's get on the right contract, and then all of a sudden we've got. So now we've got some things here on. There's 112.20, which is a floor, which actually would be pretty good since we're looking at the 112.15 price range where we're currently at. We just don't have the setup actually confirmed with a closed out candle. But I got about 47 minutes here. I would like a little bit more time on this one, so I can go down and take a look at maybe something with something like an hour 45, maybe around 2 hours. That'd be nice. It'd give me the opportunity for a few more candles to form. If the market starts going sideways, then it doesn't drain all the time out of my contract, and I can still take a look for something here. And also, you'll notice we have the 112.20 that is still we're right at the floor of the contract, which is always ideal if we can get that. It doesn't always occur. Sometimes you might have a great setup in the price action, but the floor or ceiling prices just don't correlate very well with where the setup is occurring in the price action. So I like this one a lot better. If you wanted to be with something a little bit more in the money, you can look at some of these. It's just going to cost you a little bit more when you buy into them, but either one of these could work. I personally like the floor price. It gives me a lot more room to run upwards to that 113 level, which is really going to be at the top of the bracket and a retest of that high, and potentially a move beyond that. Here with this one, you don't have as much runtime, but you're already in the money on the contract, and you could be looking for this one for a little bit more of a shorter run, and that could be all fine as well. If we go down a little bit more to some of the other contracts, we'll find we have a lot more time. I don't know if that's going to be as beneficial. We've got almost 3 hours here. We're working with some pretty short time frames like the 15 and the 30-minute. So probably a little bit more than what we need. And then the pricing is a little bit more out of the money. It's still pretty close, but we get a little bit more runtime to the top at the 113. So that one actually works out as well, but it just gives you a little bit more time, upwards of almost 3 hours. Some of the other contracts here are already in the money, and they'll go up almost to that 113 level. So the first two could almost work equally as well. The third one doesn't work because you're already at that ceiling level. So in looking at some of these, I'll take a look at more than likely that 112.20 I think is going to provide us with a little better scenario. So we did need a nice bullish rejection candle right there. I'd be looking for a break of the high of that candle, which should be right around that 112.17 level. And we're getting ready to break that already. We're just kind of testing it right now. And so that looks for basically for the next setup. And then looking at the 30-minute chart, we already have a nice rejection candle right there, setting up another one, and we'll look for the break on the lower time frame, the 15-minute. So that's the one setup I wanted to look at, and then the other one, similar to the dollar yen, would be the euro yen. So a couple different options here. And again, on the monthly chart, we've got we don't have the sideways action as much as we saw on the U.S. dollar. Here we've got some higher lows, higher highs, higher low. Really a much more nice more trending price action there on the monthly chart, and then actually on the weekly it looks a little bit more sideways, but we still have a higher low here, have a higher high there, and then it looks like we're putting in another higher low. We just don't have all the moving averages quite in alignment just yet. So a little bit different than the dollar yen. And then going down to the daily, moving averages are not necessarily in the right order for us. Everything is pointing down on the 8-hour chart, and then on the 4-hour and the 2-hour, we have the same thing, but with some of these lower lows, we have a couple legs of very bullish divergence setting up. Here we have those same, actually very nice bullish divergence here, 2 legs right there. Market continues lower on price, and yet the indicators start making higher lows, and they start to be trending up while price continues to trend down. So that's a very bullish signal, at least for a relief rally. Doesn't mean there's going to be a whole turnaround in the market, but it means that we might have a pop in the market from here. And then so as we get to the 60-minute chart, we can start to see the higher highs, higher lows forming. The moving averages is 50, the 20, and the 10 starting to fan up in the direction of the price action. And then on the 30-minute, we've got that nice bullish candle right in the buy zone, another bullish candle breaking the high. So this one's already set up and already taken off. As you can see, the indicators are moving nicely in conjunction with the higher highs. So that means the MACD is putting in higher highs as well, and then we have higher highs as well on the RSI. Here on the 15-minute, we've got some candles setting up right here. We have everything, the 200, the 50, the 20, and the 10. We've got a little pullback right there that doesn't look all that great. I don't see any reason for a false signal here, unless it's maybe for just some slight divergence here on that peak. But let's take a look at some of these around 129.9 would be the level I'd be considering. And if we get a breakdown through this level right here, then that's going to nullify this trade setup. We really need a rejection of this right here, and we need this candle to close out somewhere at the top right here. But any break below 129.8 is going to invalidate this trade. So if we get a nice rejection candle here, say on the 15-minute, and it closes out nice and bullish, then I'd be more inclined to continue looking at this trade. But let's take a look in this 129.9 range and see where we're at, just for discussion points on this one. And we're looking at the, let's see, the euro yen, which would be right here. And then we can look at We still probably want the 15 and the 30-minute. We probably still want a little bit more than 40 minutes of time on this one, but we're right at 129.9. So we're right at the floor of this spread contract. So that would give us basically almost three candles, which I don't like that as much as having, say, just like in the one we looked at previously, having at least about an hour and 40 minutes gives me, the opportunity to have 4, 5, 6, almost 7 candles on the 15-minute chart, and then potentially, 3 candles on the 30-minute chart, which is the 2 charts where our trade is setting up on. So right here, we're right at 130 is the floor, so we're just slightly out of the money on that contract, which is fine. The 129.50 is actually a decent one because that's already in the money, which is nice. So we actually do have 2 contracts here that can work for this particular trade setup. Those are the corresponding prices going long. And so as we go back to this chart and take a look at that and look at the high of where this might go, so we're getting a rejection of that level, but it hasn't closed out yet. We still have another 9 minutes for this candle to close out bullish, and that would be the only signal I'd be looking for to be involved in this trade, is looking for that candle to close out solid. And then we could potentially get a run back up to that 130.30 level, which would work well, I think, for both of those contracts that we looked at. So that's really the scenario in looking at spreads. You have a tunnel of profitability between on that one contract, the 129.9. The other one was 129.5. So it was much deeper in the money. The other one was 130, which was right here, which is very close to where we're at. That can get you into a contract for relatively cheap. The one thing different about these contracts that are different than binaries is there's really no reason to buy these when they're deep out of the money. So on the one contract where the ceiling or the floor is 130, it really doesn't make if price action is way down here, it doesn't make a whole lot of sense to get involved in these, because you don't get the price break that you do with contracts like binaries, where they're very, very cheap when they're deep out of the money. You always want to be looking for these spreads when price action is really kind of hanging around that floor or that ceiling price, to look for either those long or short trades. So there's no benefit to a deep out of the money contract when it comes to a spread. These things are really going to sit kind of in the doldrums when they're out of the tunnel or out of that range. And once you get into that range, then you're really going to start to see the spread prices start to move. And so that's really what we're looking for on these types of contracts. Let me just take a couple of questions here that have been stacking up in the box on me as I kind of walk you guys through some of these trades. Dennis is asking, are these prepackaged spreads unique to Nadex? Yes, they are. You can basically you can create these on your own with a vertical spread by using various options in the market to do this. But here they're basically prepackaged for you, so it makes them very easy to get in and out of, and it's all part of just trading one contract, which is fairly unique. Thanks, Dennis. Already caught me on the looking at the wrong contract here. Appreciate that. Pretty early in the morning here. I'm not quite on my game, but and then looking for. I don't really have any other questions here. If you guys have any, we got another couple of minutes here to look at. If you guys have any other charts that you'd like me to look at, we got about 6 minutes left. I'll take a look at maybe some other ones that that might provide us. A lot of folks have seen a lot of action here on the index markets. The S&P 500, obviously a long upward trend here, even on the weekly chart. Had a pretty big washout in the market here last week, and getting a little bounce off of that level, basically just a 50% retracement from the swing low to the swing high and getting a bounce off of that level. We'll need some more time there to see if that particular chart is going to rebound and move to another higher high. But here, the daily and the 8-hour reflecting that. We're not getting any sell candles in the sell zone for a continuation to the downside just yet. On the index markets, we've broken up through this level and put in now higher lows and now a higher high from the previous high. So that looks fairly bullish, market running pretty good here. And then as we get down to some of the smaller time frames where these trades might be setting up, like on the 5-minute, this would be a decent one to look for another trade. As you can see, these pullbacks into the zone are setting up pretty nicely, and everything is pretty flat right here, or converging on the chart. So it looks like we still have some decent momentum here. We don't have any setup on the charts just yet. I'd like to see a pullback into the zone, either on the 15 or on the 5, and then look for another move going higher. And then I'd come over and take a look at the Nadex chart and then look somewhere around, you know, that 27.95 level, or wherever the pullback would occur. But looking at the indices, the US 500, and then starting here with some of these are 33 minutes, which on the 5 and the 15-minute would give us basically 2 candles on the 15, a number of candles on the 5. So there's a possibility there. I'd probably like something a little bit more like maybe an hour and a half. That would give me a few more candles on the 15-minute chart. But here we've got, let's see, 2,800, which is really just about 5 points out from where we are. So this one is, we're right now, I think we're at 27.95. So that one's a few points out. This one is a little better because we're right at that level, even though we don't have a trade actually setting up, so don't know where that number is going to be. But these would be a couple that I'd be keeping my eye on. If we got a little deeper pullback, we might even be looking at the 27.90s by the time that some of those candles actually set up in the buy zone on like the 15-minute chart, if we were to take a look at that one. I'd probably even below the 27.90 is right there. A pullback on the 15-minute will be somewhere between 27.80, 27.85 by the time that candle actually set up, and that might be actually a little better setup than anything pulling back on the 5-minute. And then if that occurred, you'd be right back in the buy zone on the 30-minute. So you might actually have either a 5 and a 15 or a 15 and a 30-minute setup. And actually that 27.80 level would be right up against a prior level of resistance, which you can see pretty well right here. That 2,800 level, pretty solid. Any pullback into that zone would set up on a number of time frames and would be pretty good. So that'll wrap up the some of the live charts. Let me just conclude here very quickly with a couple of items, and then we'll kind of move on right here. So what Nadex is doing is they're just making an investment in your success as an investor, and that's why they sponsor events like today. A couple different ways for you guys to get in touch with folks at Nadex. Phone and email listed here for any questions that you may have, or you can ask some of your questions right now as you've been doing. Just use that question box on your screen. Demo accounts also available to provide some familiarity with the contracts and what we've been talking about today. For current Nadex members, if you'd like to begin trading again, go ahead and log into nadex.com. Take advantage of the either the advanced education webinars that we're running on a quarterly basis, or some of these Tuesday morning webinars where we're doing actually some of the live analysis and the technical setups in the charts that we're seeing. If you are new to Nadex and you'd like to set up an account, just go to nadex.com and click on, I believe it's the orange box in the top right. It says sign up. Fill in your details there. Someone from Nadex will respond via email to get you started. Before you do sign off, there's a short survey upon your exit. Please let us know your thoughts. Let me just take a couple of questions here that are popping up on my screen. One person here, I understand that the indicative price is only valid at settlement, but is only an average, not the actual underlying. That is correct. There's some other sessions where we go through talking about the indicative price. What they do is they take the 25 most recent prices at the close, and then that price they throw out, I believe it's the 5 high and the 5 low, and then they average the middle 15 to arrive at the closing price. So if you're working on the Nadex platform and looking at those charts, that is a constant algorithm that's running. So the indicative price on the Nadex charts is always basically the closing price, right? Because it's constantly averaging that price point, and then you're looking at the contracts and the indicative pricing all on the same chart, which is kind of nice. So the Nadex charts are actually very good. They put a lot of work into those, and so working with that indicative price is always nice. Doesn't give you a huge advantage since it's a fairly small range, even if you're using the underlying futures market as your price point. Let's see. FX only uses the last 10 trades, but the middle 10. Yes, I believe that's correct. So there's a little slight difference there between Forex and the commodity. I was utilizing the commodity example. What charting software am I using? I'm using my own charting software, which is TradeStation. I just do that because I can set up the charts with a number of screens side by side because we're on a limited time frame here with these sessions, and I can actually move through the charts very quickly to show you guys the setup, and it's easy for your eyes to kind of follow what I'm talking about. So I think that'll wrap it up for today. Join us next week on Tuesday again for another live session where we'll go through the charts and help you guys understand some of the trade setups that we're looking at, and then utilizing either some of the spread or the binary contracts on the Nadex platform to look at whatever trades we find setting up. So I hope you guys enjoyed the session this morning. We'll look forward to talking to you next week. Have a great rest of the week trading. Take care.